Let's speak of another stock, Reliance Capital. Saw a muted profit in first quarter because of that one-time dividend payment for Reliance Nippon Life Insurance. The company also is going to sell part of its stake in its general insurance business within this fiscal. Our correspondent Kevin Lee caught up with Sam Ghosh, and he began by asking him first the highlights of the quarter's performance.
So if you look at overall, our profits have gone up to 207 crores, up 3%. But if you exclude last year, we had a dividend payment from our life insurance business, which now is being consolidated. So if you take that dividend out, actually our profits have gone up nearly 33%. So all our businesses have performed well. In terms of top line also, we've shown a 3,700 crores in terms of top line income, which means a growth of nearly 30%. So top line growth has happened. If you look at now business by business, our commercial finance business, our lending business, Reliance Commercial Finance, AUMs are nearly 17,000 crores now. So it's up nearly over 15%. And profits are also up nearly 30% to over 57 crores. And then in that business also, our net interest margin now at about 6.8%, is one of the all-time highs for us. If you look at our housing finance business, again, our housing finance AUMs are nearly 8,300 crores, up nearly 30%. Profits are at about 30 crores for that business, and net interest margins seem to be about 3.5, 3.6%. Moving on to our asset management business. In asset management, our profits are nearly 122 crores, up over 15%. And if you look at overall assets, total assets under management also, it's 1 lakh for mutual fund assets under management rather, it's 1,67,000 crores, up 15%. And total assets under management, which includes all our EPFO funding, etc., is nearly 3 lakh crores. So that business also is growing at a fairly good rate. Moving on to our insurance businesses, in our life insurance business now, our total income is at about 450 crores, so 650 crores rather, and renewal premiums are about 450 crores, so new business premiums going up. Here we focus mainly on traditional products. 85% of our business is traditional, and our, if you look at in terms of our persistency, that's also over 60%, so that's growing at a fairly healthy rate. Moving on to our general insurance business. In general insurance also, we've shown a slight growth in our new business in gross written premium. That's grown about 5 to 10%. However, if you look at in terms of profits have grown over 23% and nearly 36 crores. So again, shown a fairly healthy growth in profits. And we know that for general insurance also, gross written premium will start growing quite substantially. We'll be above 10% growth rates from next quarter onwards. And broking and distribution, finally, the smallest business of ours, that also in the past was showing losses, now it's at break even. So now we expect to show profits going forward.
Now, speaking first about your commercial finance business, disbursements have grown over 10%. What is your guidance for this in FY17, and could you also highlight the NPAs separately for commercial and home finance?
Sure. See, if you look at in our commercial finance, growth has been 17%. We expect that for the whole year we'll show about 15 to 17% growth in terms of disbursements, and that is fairly, we've been doing that consistently in the past. In terms of NPA levels, NPAs in commercial finance is about 3.3%, and primarily from the commercial vehicle side. So again, we've had that, we've been slowly reducing that book gradually, and that will continue to go down. However, the other books, the SME book and the LAP book has been at about less than 1 to 1.2%. So it's fairly stable. In our housing finance, our total NPA is at about 1%. So again, we're very happy with the situation there. And we obviously report on a 90-day basis.
Speaking about your housing finance now, can you give us the breakup of your assets under management for housing finance, construction finance and LAP?
Yeah, sure. So if you look at in terms of housing finance, it's about 57% is home loans. Construction finance is about 16 to 17%, and the balance is loan against property. And we expect that we will continue keeping that sort of ratio, because basically you have to obviously do over 50% home loans, which includes construction finance, and obviously LAP, so that you can get good yields as well as to be able to continue growing your housing finance book.
Well, coming now to mutual funds, last quarter you had given a guidance of 15 to 20% where your assets under management are concerned for Reliance mutual funds. How much have SIPs helped you achieve that? Because you've hit 15% growth. So how much have SIPs contributed?
The SIPs now are growing at about 20 to 25%, primarily because we have about 1.4 million SIPs and STPs, and we have been very strong in the smaller towns. So if you go below top 15 cities, our average assets under management is the highest.
Okay, that was Sam Ghosh. Let's do one thing. Let's analyze those numbers and that demerger plan. Nidesh Jain of Investor Capital is also with us. Nidesh, hi, good morning. So, what's your, sum of the part valuation for Reliance Capital? Because that's what the market is going to do now going forward.
So, my current SOTP of the company is around 550 rupees.
Okay.
And around 150 rupees is coming from life insurance, 150 from asset management, 130 around for commercial finance, and remaining from the other businesses, which is primarily general insurance.
Okay. Morning, Nidesh. How are you looking at the company's move to demerge its commercial finance business into another subsidiary? Do you see them hiving it off, listing it separately? Therefore, will it change your valuation?
So right now, if you look at the commercial finance business, it is around 18,000 crore book. Plus, they have a housing subsidiary, which is a 100% subsidiary of commercial finance. Firstly, this book is on a standalone balance sheet, and hence it becomes a bit difficult for analysts to analyze the profitability and capital employed in this book. So after hiving off this book, from analyst perspective, it will become slightly easier, and the disclosures will improve from the company side for this book. Secondly, if you look at all the businesses, this will be the one business which will require capital going forward, as it is growing at healthy pace, and the future outlook is also quite strong for this business. Hence, I expect that after hiving it off, there may be a chance of company raising capital in this business.
So when you say the future outlook is good in commercial finance, what kind of disbursement growth are you looking at?
So I'm looking at somewhere between 15 to 18% disbursement growth. Okay. The current ROE of the business is around 15%. So there will be some requirement, and plus housing finance is growing at around 30%.
Yeah.
Okay.
So combined entity may grow at 20%, and hence there will be some capital requirement.
Did you hear Sam Ghosh just now? He was telling us the breakup of the commercial finance. A little over 50% is housing finance. That includes loans to construction, and a fairly high percentage given to loan against property, which will of course yield high, but that's also a high risk sector. You're okay with that? The way in which the AUM is distributed?
Yes, so if you look at home loan has a loan book of around 8,000 crores. Around 64% is primarily housing loans. If you compare this with other housing finance companies, some of the other housing finance companies are having even higher share of housing loans. Okay. So firstly, from size perspective, they are very small right now if you compare with other large housing finance companies. And smaller housing finance companies are growing at a very healthy pace. So from growth perspective, I don't think there will be a big challenge for the company. From a non-housing loan perspective, I will like to see more growth in home loan rather than growth coming in from construction finance and LAP.
Okay. Nitish, stocks have done well, of course, in the NBFC space. Which ones are you still bullish on? What's your pecking order?
So in the NBFC space, I am bullish on Mahindra Finance. And in a small finance bank, I am bullish on Equitas Holdings.
Okay, Nidesh, thanks for giving us those ideas. Well, that's the word coming in on Reliance Capital.
Nidesh, I was just wondering if you're still with us, your view on RBL?
So I don't cover banks.
Okay, fine. We'll leave it at that. Thank you very much, Nidesh, for joining us.
Just want to point out